Today in the crypto space, we see the market taking a bit of a dip. Bitcoin down approximately 2.5% and Ethereum down approximately 2% below that $3,500 mark. The rest of the crypto space, the altcoins are deep in the red, some of them very low like Near Protocol, ICP, VeChain, many others. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one altcoin, one project that is looking pretty good. It's holding up despite the negativity, and that project is called LCX. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the chat. You can hit me up on the socials, the links are in the description. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, let's begin. Let's see what's going on here. The overall market cap is falling once again. We have a bit of volume to the upside as it is falling. Not a good look. Let's refresh this real quick to see what we get. Yeah, you know, taking that little dip, we're getting a bit of a dip here with regards to total market cap. Not a good look, but ultimately we're not making a lower low just yet. So Bitcoin, as you can see, not making that lower low. So maybe a double bottom. We are still seeing a bit of negativity in the momentum, in the trend, and all that. So, you know, embrace and prepare, because it doesn't look the greatest, but you never know. We could get that support. We'll take a look at the Bitcoin chart very soon, and we'll take a look at LCX, and we'll see what we can come up with. Solana doing the same thing, double bottoms, but double bottoms everywhere, guys. Look at this. The general market is grinding to the downside and double bottoming. And as of now, if we do make that lower low, just understand that, you know, we could fall right through. And if there is, you know, volume gaps below, it could fall significantly. So prepare with those stop losses, you know, to mitigate that risk. We do see a lot of projects pulling back and going sideways and grinding down very so slightly. Monero going sideways, at least at the top of the range. Render taking a bit of a dip here, down 6.3%. And we see a lot of double-digit dips throughout the market. Our portfolios right now are in the red. They're hurting for sure. IMX down almost 20%. We have Dog with Fat down. We have the graph coming down 16. You get what I mean? We get a lot of opportunity right here. So what we want to do is form a bit of you know, confidence in the change of character of the structures as they do come down, because as of now in the short term we've been getting lower lows and lower highs. We want an indication of a higher high or a higher low, and as we get to those levels, those critical levels, we could get sweeps of the low. Like look at Arweave right now, I think is at a great opportunity. It is down 30%, guys. It's a nice dip. It felt pretty good. It's down. Floki's also down 32%. It's not bad. You're not buying the tops. Same with Phantom, and the list goes on. Double-digit dips everywhere. Okay, guys? So pay attention to them. Put them on your watch list. DCA nice and slow as you get confirmations, and of course join me live tonight at 7:30 and we can go over some of these charts, and I'll definitely put your requests in top priority. All right, guys, let's begin, because generally speaking the market is down approximately 5 to 10%. It is definitely opportunity, but what I would be looking at mostly is the 7-day. A lot of them are dipping down much more than expected. Okay, guys, so let's get right into it, guys. I know you're here to talk about charts, so let's begin. Let's see what's going on here with Bitcoin. Bitcoin at the end of the day is you know, disrespecting the structure just a little bit. You can see that we fell slightly below the horizontal, which, you know what, guys, we happened before once, twice, 3 times, 4 times, and this is the 5th time. Now ultimately what we would want to see is a daily candle close above the thick white line. We would like to see a slightly higher low based on lower time frames. We would like to see a lot of bullishness coming out of this dip, right, so that we can buy it and basically see a nice recovery. However, guys, if we continue in this stance, you know, basically closing this daily candle the way it is, it's likely that we start pushing down. You know, we could get some support at about 65 and change, but really the next level of horizontal support for me to really watch is at about 60,500, give or take. If we start breaking below this thick white line down here after trying to make a right shoulder, guys, it doesn't look good because we're breaking down from this big bull flag that we've been, you know, tracking for the last little time. So you can see that it looks great, right? It does still look good. We potentially cup and handle, bull flag right into here as long as we close that daily candle tonight. And of course, we'll be live at 7:30 Eastern, and the Asia markets will be waking up and to see if they buy it all up and push the price right back where it came from. All right, guys, so we'll pay attention to that. We do see that the momentum, let's see what's going on here with momentum, still pushing down. Purple line is still pushing down, but volatility is already oversold, so it could be done. We could see a bullish response very, very soon, similar to what happened here, and here. All the time it gets oversold. Every time we see the volatility go oversold, we do get a response. And you can see the last time we came back up to range highs. Do we get another opportunity like that to see the price get back to range highs and maybe eventually get that breakout? Because ultimately we do see that the momentum hasn't gotten overbought just yet. So something to consider. All right, guys, so something to consider. The trend itself is doing, you know, very negative, guys. Look at this. EMA is facing down, red histogram bars to the downside. The expansion, the purple expansion looks like it's ready to roll over. So just be careful. But the only thing that I can say is that over time, we've been seeing these expansions to the downside, the blue ones, get smaller and smaller, which means that they're diverging, right? They're diverging very clearly. Now we see the EMAs, they got a nice run up, a bit of a retracement. Do we get another cross and maybe get another run up into bullish control zone? It's also very possible. But in the meantime, in the short term, meaning on the 4 hour, guys, we're definitely coming down. We're looking very negative. It doesn't look like, you know, any major level just yet of support, and we need to break back above that level of horizontal support in order to maintain a bullish stance. We can't stay like this, and we can't keep on pushing down because this doesn't look good, and ultimately we're going to be start looking for much lower levels. And again, 60,500 more or less is my next target, bearish target, if it does happen. All right, guys, let's jump right into the chart of today. LCX, let's see what's going on there. LCX has been doing pretty good considering the negativity. Let's look at the price action. You can see that it's definitely respecting horizontal. You know, the horizontal support 1, 2, 3, you know, 4, 5, we got bought up there, and this is the 4 hour time frame. Just understand that the volume gap is definitely there, showing a lot of weakness in the sense that if it continues falling with a bit of volume, it could fall right through the volume gap and get support maybe at about 15 and change, which means that ultimately that's where you should be considering to take a little bit more risk. At the current moment, we're still pushing down. We're below that 200 daily. It doesn't look the greatest, I get it, but if you plan on going long at the current moment, I would be putting stop loss in there and anticipating that it could come down to about 15. Just understand that even 15 itself is not the most, you know, the level with the most strength. We have other levels below that have a lot more strength, which is at about 7 cents. If we come down to about 7 cents, that's where you get a fat wall of supply and demand to act as support. The initial breakdown, break to the upside is looking great right around this level. So this would be a buy opportunity. This would be a buy opportunity. And where we are currently could also be a buy opportunity, because this could be just a liquidity hunt, a sweep of the lows, a bear trap where we definitely come down, get a nice bounce, get back into the structure and start bouncing to the upside with all this market participation, as can be seen right here. But as of now, guys, there's no real reason at this level to think that we're going to get a recovery just yet. Let this thing resolve. What we need, what I mean by resolve, get back into structure and back test, because as of now, you can see that the momentum and the trend is pushing down. There is no support below until we get to about 15.7 cents, and then we can deal with, you know, the price action and deal with buying the dip. But as of now, buying a bit of a bag to get some of that exposure right around this level is not a bad idea. Definitely not a bad idea. So let's zoom out a little bit and kind of see what's going on here. We got gaps, we got opportunities, we got momentum, we got volatility. As you can see, volatility is pushing down. Lots of expansions to the downside, you know, across the oscillators. But as far as the setup goes, the only way that we could get there and properly get into a setup is putting a clear risk to reward ratio with a risk management strategy. So I know we're pushing down, but let's say you want to get some skin in the game right now with the sweep of the low. You're going to put a stop loss right underneath these wicks, and you're going to take a bit of profit right around here, okay, which is at about 30 cents. Risk to reward is 5-1. Decent opportunity, but just understand if it breaks that low, you want to get out because you don't want to be catching that falling knife. And then what you want to do is repeat that process right around here. Okay, just understand that this 10% has to represent only 2% of your trading portfolio. So this loss has to be only 2% of your trading portfolio. That way you have enough, dry powder to get back in the game. And if you get stopped out, no big deal. You get back in, and eventually you would hope that you can get the next move. The next move, again, another TP at about 23 cents by entering right here at the bottom of the volume gap, right? That would be really good, but also trailing up that stop loss to let some of the capital run, because really we can still get a bit of a pop all the way back to 31. Now, if we do get stopped out down here, guess what? You're going to have to wash, rinse, repeat. Continue. Buy the dip down here. Once we get structure, you buy in, you put that stop loss nice and tight, and then you're hoping to, in fact, take a bit of profit here. Take a bit of profit here. In the meantime, you're trailing up that stop loss, take a bit more profit here, trail up the stop loss, and you keep on doing that until this thing runs. Now, even very modestly taking profits or seeing what could happen by buying those bottom levels, you're looking at about 320% move to the upside. Okay, so this is what I'm trying to say, is that after a while, you may lose a few trades, 2%, 2%, 2%, but ultimately look how you can make it all back once you catch that bottom. Right? You want to mitigate the risk, you want to reduce the losses, but maximize the gains. And you can see that it's very, very viable here. Okay, so really where we are right now is not bad because of the structure. We can get back into the structure and bounce, but until we do that, I'm not willing to take risk. I'm eyeballing this level because it looks like we can fall through that volume gap and get there. If you did buy already at this level, just hang tight, guys. Just hang tight, because we could definitely get back in, or you can stop yourself out and hope for the best and hope that we come down lower and that you didn't exit on a loss for no reason, and you can buy that. You get my drift, guys. Ultimately, it's a game of probability. There's no certainties here, but you can clearly assign a value to the statistical probability at every single level. And that, for me, that clarity is absolutely important for a trader, to gain clarity in the charts so you can build that confluence and confidence in the chart so you can make those setups. So again, back to volatility and momentum, looking okay in almost extreme conditions. I would like to see the purple line already nicely oversold. It's almost there. We can see that the volatility is trying to push up, and we could get that volatility pushing up again and getting the momentum pushing up again, and obviously getting the price pushing up again. And we're in extreme zones already in oversold conditions, and the EMA is facing down with red histogram bars suggests that there's a lot of negativity still left. However, we are in a bit of a divergent state with a lower high in comparison to this one, a higher low in comparison to this one. But still, guys, look at this dip down here, and then all of a sudden, what do? Do we get an EMA cross and continue to the upside, or are we going to continue pushing down, guys? The EMAs, the MACD, the trend oscillator right now is not looking the greatest. It suggests a continuation to the downside. So be prepared. Since that is possible, just be prepared that it is also possible to come down to about 15.4 cents. That would be my next area of interest. That's where I would be willing to take more risk, and obviously all the way down here. All right, guys. So I'll keep you posted. Join me live tonight at 7:30 Eastern, where we talk about crypto news and price action. Of course, we'll go through charts, and if you have any requests, I'll definitely put them in top priority. Take care, guys. Have a good one, and don't forget, buy the dip.